All right, welcome back. I'm Pietros Maneos, CEO of the Maneos Compounding Machine. And today I'm going to go over the results for July. For those of you who follow me, you know that every month on Seeking Alpha, I write an essay detailing my results for the month. And I've been doing that now for approximately 2 years. And so we're going to get into that. But before I um, run over the results here, I wanted to just mention the last few days I've been watching this influencer, Alex Hormozi, and I can't recommend him enough. I mean, I think he makes phenomenal content. I've kind of been binge watching a lot of his videos, and I definitely have been influenced by influencers. So my real estate holdings. I learned the real estate game from Robert Kiyosaki and Grant Cardone. My stock market investing, a lot of the value guys, Benjamin Graham, Warren Buffett, Charlie Munger, Monish Pabri, Guy Spier. And Hormozi is, I would say, more on the entrepreneurial business building as opposed to just sheer investing like Buffett. But he's a kind of a mix. But I would say that's sort of the main thrust is the entrepreneurial element. But he did this one video, which is honestly one of the best videos that I've seen recently on personal finance and investing and wealth building. And it's titled, let me see here, and I'll link it at the bottom. How I accidentally made 17 million when I was 28 using leverage. And he talks about ways that wealth can be built. And so he talks about things like labor, capital, code, media, and he just really breaks it down beautifully. And, he makes a point there, and it's something I've always identified with, and I always say to people, and I see myself as kind of a rebel in this way, is like, a lot of people, they're told to go to the right schools and, get your MBA or your law degree or your accounting degree. And I've always admired contrarians, people, artists and even criminals. Not saying violent criminals, but people who think outside the box. And artists oftentimes fit that mold. And so, as opposed to, going to college, getting your degree, getting your six-figure job, that he really explains in this, and I always explain this to people, that if you do those things, that's fine. But if you really, really want to get rich, you want to own things. You want to own cash flowing real estate. You want to own stocks, bonds, mutual funds. Pick some businesses. You want to build a business. You want to take your capital and buy a business and grow it. You want to build a business and exit it, so on and so forth. So, but at the end of the day, you want to own things, and as opposed to getting a high paying job. And there's a little bit of Robert Kiyosaki there, right? He's someone who really hammers that home. So I would encourage all of you to take a look at his content. Alex Hormozi. He's also a fitness guy like me, real built, and I think he started in the gym business. So, anyways, that's it on Alex. And so now let's go into July. So you can see the figures here. I added $1,000 into the machine, so I'm at 600,000 in. I'm at 1,045,558. So my total return in these past 2 years and 2 months, 74.25. The CAGR, I do two calculations here, and I explain the difference at the bottom here. But basically, I started recording my returns in May of 2019. So if you take it from May of 2019 to now, it's 2 years, 2 months. But if you wanted to count all of 2019, because I started in 2019, and all of 2021, even though we're not finished, then you could go the full 3 years and it would lower the CAGR. So just depending on how you want to look at it, I'm at that 29%, which is right in line with Icon and Tepper. I collected about $14.93 in option premium this month, which is a little bit low. The reason being is the expiration, the last Friday of the month, it happened on the 30th. A lot of times that happens on the 25th, 26th. So then when I institute the following month's options, it's before the end of the month. So for example, Monday morning, I'll be a busy bee getting my options contracts out, which in theory might mean that August will have a higher a premium amount. Monthly income, 4,100. The monthly income is a combination of dividends, option premium, and securities lending, which is through Interactive Brokers. So, that's pretty good though. So just from those couple of things of collecting dividends, options, securities lending, basically that's a salary somewhere. That's if I got up in the morning, went to a cubicle, and had a job. So, and that's all sort of passive, if you will. It's all market based. Monthly income, 41, year to date, 46. And then these are my two primary quant funds. And I started these in Motif. They eventually were transferred to Folio, and then they were transferred to Interactive. And so they've just been bounced around. But so I just put the total amount. So let's tally it up here. So between these two funds, 170, 860, 97 plus 122, 921, 06. So we're at 293, 78203 between these two funds. So almost 300,000 just in these two funds that I've built. And then it's just sort of the open option positions here. And then this is what I feel is like the most important figure. And the reason I say that is everything I do goes back to compound interest. And the snowball, the Warren Buffett snowball. And so this is a number, it's a little bit lower this month simply because the option premium is a little bit lower. Sometimes this option premium is 4,000 or 5,000, so this number is 8,000, 9,000, 10,000. But it's still pretty good. I mean, we're at 5108, and you see dollar cost, I put 1,000 in. Dividends this month were 25.27. Option premium 14.93. Securities lending 87. So that means that between all of those, 5108 was repurchased of new positions. And this is what this is doing is I'm taking my snowball and I'm pushing it a few inches and it's picking up more snow. And so that the next time dividends come off, more come off. When I get capital appreciation in the stocks, it's just kind of snowballs. So that's, and again, that's a kind of a lower number. Ideally, I like this number to be between 5,000 and 10,000 a month. But, the power of compound interest is, and I actually make this point a little bit further up here, that what I do here is I say that if I get a 25.7% return versus a 16% return on this 1,040,000 or so over the next 20 years, it's either it's either 20 million at 16% or 100 million at 25.7%. So the difference between a 16% return and a 25% return over 20 years is $80 million. Let me say that again. The difference between a 16% return and a 25.7% return over the next 20 years, again, this is on the $1 million, 1,040,000, is $80 million. And this is why people, and I name drop them, because you, as an investor, you should know them. Just like if you're a basketball fan, you should know who Devin Booker is. You should know Giannis. You should know something about them. If you're a fight fan, MMA fan, you should know about Conor McGregor and with George St. Pierre and Silva. There's some of the older guys, but my larger point is you should know names like Carl Icahn, Warren Buffett, David Tepper, Peter Lynch, John Templeton. You should be aware of who they are, and if you're not, you should just order books and read about them to learn. But yeah, and this this actually factors into a conundrum that I have sometimes. And a lot of times I think, it's for me, it's not enough just to be an investor. I should be entrepreneurial. Perhaps this is maybe the influence of Alex Hormozi, who I mentioned earlier. But then a lot of times when I start doing the math, is I'm probably better served in simply mastering investing and getting alpha in the market than starting businesses with employees, with product, with inventory, with advertising, with marketing, with a physical location where I'm paying rent. If I can simply get a high return on this capital, I end up at 60 years old with somewhere between 20 million or 100 million. So there you go. But look, both are good and both have their benefits. The thing is, someone might say, well, how do you get to the $1 million? The Charlie Munger, the first 100,000 is the hardest. So you could take that and say the first million is the hardest. And then it's, what is it that you're doing with that $1 million? Are you buying other businesses? Are you expanding brands? Are you an entrepreneur? Or are you Warren Buffett? Are you Carl Icahn? Are you an allocator of capital as opposed to someone who executes business plans? Again, both, you can succeed at both. So that's pretty much it for today. So obviously, I think if I get about a 5% return, I'll cross that 1.1 million number. So we'll see what this month holds. I have my laundry list, which I call, for stocks that I want to purchase the following month. But I might throw all that out the window. And I'm really looking at a ETF called KWEB, which holds a lot of Chinese tech that's sold off tremendously. And I did the same principle. Remember, the market, first of all, I don't believe markets are efficient all the time. And I'm a good company with that, other than, maybe Ivy League and NYU professors. But Warren Buffett and Charlie Munger don't believe markets are efficient. Greatest fundamental investors, probably. Jim Simmons, greatest quant, Renaissance Technologies, they also don't believe that markets are efficient. So you have the two greatest investors in different types of investing, fundamental versus quantitative, and neither of them believe that markets are efficient. Now, they might say they're mostly efficient or efficient 80% of the time or 90% of the time. But just the larger point I'm making here is, in 2020, I made a fortune. I tripled, quadrupled my money, and I got this because I was buying fear. I was buying what was the most out of favor sectors at the time. I was buying energy. I was buying hotels. I was buying cruise lines. I bought all the cruise lines. I think I'm up like 80 to 100% in Royal Caribbean, Norwegian, and Carnival. My only regret is that I didn't 10x that. I didn't buy 10 times more of each. But the same kind of thing right now is happening with China overall, and specifically Chinese tech. I think Tencent might be down 60, 70%. So KWEB is an ETF that holds all of China, most of China tech. So I'm thinking about just picking up just KWEB on my allocations this month. We'll see. We'll see what I decide to do. But anyway, so I'll update you guys next month. Monday's going to be a busy day with the options. And we'll see what this month holds. Take care. Ciao.